Hey guys, welcome back to the channel McNallie Money, the official home of power analysis. AI and AI infrastructure are quickly becoming one of the hottest sectors of 2026. We're going to be breaking down this thesis along with top news from many of the heavy hitters in the space in today's podcast. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about the sector as a whole and your top pick heading into 26. With that being said, let's get into today's video. Okay, guys, away we go. Wednesday afternoon, another big episode for you today. We've got some top headlines to discuss, the impacts to the industry, and of course, production updates, latest headlines from the miners slash HPC AI plays. Anthony, before we get into the miner and news detail, Bitcoin price itself currently in the $91,200 range. We're above that $90,000 kind of scare zone, but well below where we were just a couple of months ago.
Yeah, we're slightly less than yesterday, but a bit higher than a couple of days ago. So not overly a major concern at the moment. Obviously, there's bits of news issues around the world. With the likes of the issues around Ukraine and issues around the Middle East, issues around South America, even issues around Greenland at the moment, Bryce.
There certainly is. Yeah, geopolitical tension and drama is at an all-time high. But as you like to say, Bitcoin does what Bitcoin does. The miners themselves, this is a bit of an interesting story as well. Yesterday, right after our podcast, the sector itself recovered quite strongly going into the close. Today started off in the red. We've seen somewhat of a similar recovery, about 50-50 now, or maybe 60-40 green versus red, but starting to see a bit of life, at least in some of the names like Hive and Riot.
Yeah, there's a sort of like probably a third of the mining stocks in the green and the remainder in the red today. But as I say, we're doing these podcasts probably a couple of hours after the market opened, just to give time things settle down. But bear in mind, yesterday quite a volatile day. We started green, went red, then it ended up sort of like being predominantly a green day. So it's no use looking at us. We don't give any price predictions on mining stocks. We just try to explain how it is at the time of the price and how things have happened over a previous period. But yeah, the mining stocks are, we're all in this space because of the fact that, there's a certain amount of volatility that attracts a certain type of investor. And those people that have been in this area for just over, a couple of cycles of Bitcoin will understand exactly what I'm talking about. I mean, remember a lot of these stocks, some of these early stocks, the likes of Hive, Bitfarms, Hut, Mara, Riot, even the likes of DMG, which we don't cover. These are some of the early Bitcoin mining stocks, and those prices were in the pennies back in 2019, 2020, and today they're obviously a lot more, a lot bigger than that in terms of size, in terms of market capitalization. We've seen them grow over the last few years and develop their strategies, and but the volatility's always been there. It's never, it's been one of these areas where, a stock price can rise by 20 or 30% on a day, and it can also drop by the same amount. And basically, the challenge is to pick the winners from the losers. And that's a real challenge because, over a cycle, you might see some stocks do really well, and you're hoping they'll continue to do well through the next cycle, and it doesn't always work out that way. So we do see some like rotation of stocks. I mean, you look at the last couple of years, we've seen the likes of IREN, Cipher, TeraWulf really come from basically, from very low prices into some real significant prices now, and sort of like effectively the three largest stocks in the sector in terms of the ones that we cover. Whereas previously it was the likes of Mara, Riot, and CleanSpark. So we have had a changing of the guard in the last 12 months. But as I say, today, a bit of green and a bit of red. Nothing to be too overly worried about there. As I say, Hive, Riot, and Hut having the best of the days. ABTC, Wi-Fi, and Cipher maybe not having as good a day, but nothing too concerning at the moment.
No, it looks pretty stable, and we've talked a lot about our excitement, anticipation of 2026, both on the Bitcoin price side and on the HPC AI deal side of things. Now, you bring up the volatility in this sector. A large part of that is driven by fear, uncertainty, and doubt, or FUD as it's known in the industry. We've covered this extensively over the last 2 years, looking back at things like DeepSeek, even the election cycle, some of the policy changes. Another one that was kind of hanging over the industry was this decision on indice inclusion for the DATs. So last night, Morgan Stanley Capital International came out with a ruling. This is essentially looking at companies that have over 50% of their assets tied up in digital assets. So think of Strategy, think of Mara, many of the companies that are on that top 100 list from HODL 15. Now we can see through Matt Siegel's post last night, two specific lines that are relevant to what we cover on the channel, Anthony. First and foremost, DATCOs currently included in the MSCI indices will continue to be included. However, they're not going to implement increases to the number of shares. So this has an implication on the passive buying component. I'll pass it over to you. You can talk a little bit about what MSCI does and the potential impact on these DATs.
Yeah, so MSCI is not itself an investment bank. It really is a financial data and index provider, and it effectively creates widely used stock and bond indices, analytics, ESG data, risk tools, and benchmarks used by investors around the world. So, not to be confused with Morgan Stanley, the bank, this is effectively looking at it from an index perspective. And as you clearly say there, this update shows that the issue now is many of these DATs where they're obviously their modus operandi is really to effectively grow their cryptocurrencies, albeit Bitcoin or Ethereum. And one of the strategies for doing that is actually to sell shares and to use the proceeds of those shares to buy the necessary crypto asset. What MSCI said now is it will not allow further shares in the companies once they've started to do that that strategy of effectively diluting shares to buy Bitcoin. So they're no longer able to purchase shares through the basket of shares effectively through these indices once that's done there. And that's sort of like created a bit of a conversation on social media, Bryce.
Certainly has. Yeah, we've talked about this indice inclusion. That's one of the big reasons companies want to be domiciled in the United States. Once you're included in an indice, you get picked up with the pension funds, the retirement accounts, all of these accounts that buy these passive index funds. We can see for Strategy itself, they issued about $15 billion worth of new shares in 2025 alone. You can imagine how much of that was purchased through passive investing or ETF investing. So this does have implications. Now, luckily for us, we do have a few companies that we cover in the space in that category of 50% or more of their assets in digital assets. Mara comes to mind. Even Bit Digital, which we're going to cover their monthly Ethereum update a little bit later. Now, this has really gotten a lot of people in the industry talking. Rob Samuels, head of IR at Mara, they've for a long time really differentiated the fact that Mara is an operating company that happens to hold Bitcoin. They're not a digital asset treasury company. He's taken to social media voicing a strong support for this ruling and really giving Mara and companies in that similar kind of vein the go-ahead for 2026.
Yeah, we've heard many times from Mara itself that they've not once been considered a DAT, and we saw this even reconfirmed by Rob Samuels, the head of IR, yesterday on a tweet where he sort of basically putting this article where MSI announces this no exclusion of digital asset treasury companies, and he's saying that we've been clear from the start. Mara is not a DAT. It's a vertically integrated digital energy and infrastructure operator whose primary business is Bitcoin mining and related energy data center infrastructure. with additional potential use cases in AI and HPC workloads. There's a mouthful for you. We did cover Mara more extensively last week when we did a sort of a deep dive on a few of the miners there during that period where there wasn't a great deal of news. Now, I think we covered the facts of all those areas that Mara operates in there. I mean, many people will think because Mara have the second largest HODL on the balance sheet, and the fact that they've used the selling of shares or the raising of capital through convertible notes to buy Bitcoin, that they would be considered a DAT, but clearly Mara don't want to be put into that sort of bracket there. Effectively, they have, their strategies are elsewhere at the moment, and so therefore the company have come out again and said very clear they're not a DAT, and that's probably an answer to the questions that were raised yesterday.
I think it is. And as we saw in the remarks, it takes a lot of time to differentiate, distinguish between these companies in the DAT space versus those that just have digital treasury or digital treasury assets. We've seen also from Rob, he talks about some of the highlights in 2025, acquiring that 114 megawatt wind farm in Texas, their flare gas partnership, and that MPLX partnership we've talked about with the potential to get up to 3.3 gigawatts. So really highlighting the fact that this is a global energy player. They've got their own source of generation, which we think is a great kind of differentiator. And then they go on to even talk about their digital energy process, acquiring low-cost fuel, building on-site infrastructure, and directing the power to its highest value use. So both of us looking forward to hopefully seeing some AI HPC announcements in early 26 from Mara.
Yeah, and also we should add, because I was at the conference, at the AIM Summit in Dubai conference, Salman Khan, who's a CFO, was on the stage, and he referred to electrons as the new oil. Energy is becoming the defining resource of the AI era, just as oil shaped the industrial era. As inference scales through 2030, we believe power becomes a true bottleneck. And we've mentioned that many times on the podcast. We've talked about the fact of how much power is currently being utilized in the HPC data center space, and around about 4 gigawatts, and what the requirement is, it's probably 7 or 8 times that amount. That number keeps growing literally every month we talk about it. So obviously Salman's reiterating that fact that conference took place in November, and I was fortunate to be there. And so, quite rightly, it is a bottleneck, the power, and this is why the mining companies are in such a good position in terms of, they've got the power or access to the power, and these big hyperscalers or neoclouds, they need the power. And so what we're seeing in 2025, and we'll see a lot more of in 2026, is the alignment of these companies alongside the mining companies who've got access to these power. And, if you look at Mara's, they're currently 1.8 gigawatts up to a potential 3.3 gigawatts. That's a significant amount of power there, and maybe part of that can be used for their AI strategy, and time will tell.
Certainly will, yeah. And really everything coming together on the Bitcoin front and the AI front for this sector right now. Another favorable ruling from MSCI last night, and again, a further sign of adoption. Now, you talk about conferences, Anthony. We just booked in for Bitcoin Investor Week in New York. This one's hosted by none other than Pomp, or Anthony Pompliano. Some of the headline speakers: Mike Novogratz, Anthony Scaramucci, Grant Cardone, Lynn Alden, Bo Hines, and Jan Van Eck himself. So someone who knows quite a bit about ETFs in the investment market. This is going to be our second time there, both looking very forward to this one.
Yes, we were there last year at the conference, and excellent number of speakers. A lot of really good guests turned up, made a lot of connections there, and we'll hopefully be able to listen to a number of these speakers and make the same connections again going forward. Looking forward to that trip, yeah.
Certainly, and we'll be out there at PubKey as well. So if you guys are in New York, February 9th to 13th, you'd like to meet up, we'd be more than happy to. Now, moving into the miner-specific news, you just mentioned this urgency of the miners to refocus their megawatts towards higher returns, HPC, AI. That being said, at this point in time, Anthony, you've made this point a number of times on the show. all of their revenues, or the vast majority of revenues, still are coming from Bitcoin mining. We're seeing difficulty continuing to increase. Hash price has been under pressure. So it's important to monitor these metrics over the next 12, 18 months through this transition period, as they're really paying for a lot of the HPC AI build out we talk about.
Yeah, absolutely.
So with that being said, first one we wanted to examine here, December production results, BitFuFu. You've brought along your comparative table. We can walk through this and then talk about their HODL slash cloud hosting.
Yeah, so obviously December, the last month of the year for BitFuFu, they've mined a total of 3,662 Bitcoin during the year. That's through self-mining and also through their cloud mining business there, which has been very, very successful. In terms of December itself, we've broken that down into our normal table. Total Bitcoin mined from both services, 188 Bitcoin. That's a reduction on last month there. So effectively, one thing that we know about BitFuFu, they do have a bit of curtailment, especially when power prices are high. So they'll switch off machines and wait for the power to come down, because power prices change, on the market value change pretty much regularly with great regularity. I mean, in Texas, it's like every 15 minutes. So they'll have used that curtailment there. In terms of self mine Bitcoin, of that 188, 37, so down 10%. Now that's obviously different from what we're seeing from peer miners, where most other miners were actually increasing during December. But hopefully we'll get when we get Charlie on next, he can sort of give us more of an upside as to why is the curtailment a significant issue in terms of that, or is it a case of the weather conditions meant further curtailment to make sure that domestic supply was unaffected? In terms of the hash rate, that came down slightly from 26.4 to 26.1. So again, it's telling you a bit of the story there. The self-mining hash rate remained the same at 3.7. Now, bear in mind, there's an extra day mining in December, and they still managed to not mine enough there. And there was also 2 reductions in difficulty. So maybe, is a case of, as we said, making sure domestic supply wasn't interrupted. Efficiency, one of the highest or one of the best efficiencies of fleets of all the miners we've seen there. Anything under 20 is tier 1. 18.3 is a slight increase on what it was in November of 18.1 there, 18.3 in December, but still very, very efficient, which means you're not using as much power to mine Bitcoin. In terms of selling Bitcoin, they're able to add to their HODL there. So effectively adding 16 to their HODL, taking that to 1,780 Bitcoin with a value of $155.8 million, slightly down on November, even though the HODL's slightly higher. And that's because the Bitcoin price has dropped since the end of November till the end of December. So we saw a reduction in Bitcoin price over that period there. And they sold 172 Bitcoin in December, so selling probably close to about 90% of their production. So using that for operational and capital requirements.
It'd be interesting to see how things play out in the early quarters here for BitFuFu of 2026. 1,780 Bitcoin, quite substantial. And you mentioned that growing cloud hash rate. Last we checked, around 645,000 users there. So definitely on to something. The next one we wanted to cover is Hive Digital Technologies. And this one, unlike many of the other miners we've seen that have slowed or capped their hash rate growth, Hive has continued to keep up above 2% of the global hash rate, expanding aggressively in Paraguay, and not to mention their Buzz HPC endeavors.
Yeah, the great thing about Hive is they've managed to do exactly what they said they did in the plan at the start of the year. Remember, they were 6 exahash come January 2025, and they had this plan to grow their hash rate in Paraguay. And some people have looked at their growth and said, yeah, that's going to be a challenge. That's nearly 20 exahash in probably just over 7 or 8 months. And believe you me, they've done it. By Thanksgiving date there, they'd achieved, in fact, it was ahead of Thanksgiving Day that they achieved the 25 exahash. That's enabling them to produce nearly 10 Bitcoin a day, 9.9 Bitcoin a day for the month of December, which was an increase on November. Remember, the difficulty was slightly less in December. Therefore, production levels would have increased ever so slightly. In terms of Bitcoin mined, 306 Bitcoin, that's an increase of 6%. Now, we know the 1 day extra mining accounts for 3 of that. So again, the fact the difficulty came down enabled these miners to eke out a bit more Bitcoin. That will help them in their revenues and margins. Operational power, 440 megawatts. Now, there is a plan to further increase that during 2026. They've highlighted another 100 megawatts at the Iguazu site there. So that'll take them to 540 megawatts. So there's no stopping Hive at the moment. Only likes of Bitdeer and Hive are really looking at growing hash rate in 2025, 2026 of any significant size. Yes, we've heard from CleanSpark and Mara. They've still not quite finished their position on growth of hash rate. We don't get the monthly updates from Mara anymore, so we have to wait for their quarterly updates to come out to see if there's a change. But CleanSpark do continue to provide. They're still at 50. But they've sort of I think previously said they'd like to get to 60 exahash, and they do have a large number of smaller sites where maybe they can sort of eke out some more efficient miners into those locations, grow the hash rate without having to grow facilities. But Hive here, efficiency again, 17.5, top tier efficiency. Only CleanSpark and IREN have a more efficient fleet than that. So that's really helping them. And we know that Paraguay is giving them a blended power cost significantly lower than what they were paying previously. It's probably circa around about the 4.5 cents per kilowatt hour now. So that's going to help Hive there. Remember, this is just one side of the strategy. They've also been involved in delivering HPC as long as any other miner. Remember, they were an Ethereum miner back in 2023, before the fork. And then when that occurred, they had to then sort of, consider what they were going to do with all the GPUs. But bear in mind, they bought GPUs that had dual purpose, and these GPUs were able to be used for also for HPC AI. So they started to implement a strategy pretty much before everybody else, and they've been growing that in a more sort of managed way. Not going out there spending, billions of dollars on new facilities and sites, but doing it in a more managed way and growing it. I think at the moment their annualized revenues from HPC is around about the $20 million mark, and that's going to rise to about 120 million by the end of this year. So a significant rise in 2026, plus a significant growth in hash rate. A lot of good things to say about Hive at the moment.
There certainly is. Yeah, I was going to bring up that ARR forecast on Buzz HPC, pretty aggressive, and they operate in Canada, similar to White Fiber, actually. We've seen some contracts, some big announcements out from them. Speaking of White Fiber, the next company we wanted to cover, Bit Digital. So we talked about DATS, that MSCI ruling at the start of the conversation. You'll notice on today's BTBT NAV calculator, just over 50% of the company is made up by Ethereum holdings. So roughly 50% Ethereum, 50% shares of White Fiber. That's their subsidiary that operates in the HPC AI realm, which I just referred to. So they own 27 million shares of White Fiber. If you add these two up, still trading at a 13% discount to net asset value.
Yeah, that's pretty good going there in terms of, we've mentioned this before about some of these companies with their asset values, and we'll do something later this week. I know there's been a few comments there about, Mara in terms of, we talk about their Bitcoin value higher than their market capitalization, and people say, well, talk about the debt. I can show you what their net asset value is, and we'll cover that maybe tomorrow or Friday. Just to keep people a peace of mind in terms of they are a significant sized company. Yes, they do have some debt on the balance sheet, but they have a lot of net assets as well. So we'll cover that. We'll cover that later this week, just to sort of clear that thing up there. It's not just about Bitcoin. They do have a sizable fleet. They do have land associated and power assets that also have a value, and we'll cover that, as I say, later in the week to clear that one up there. But today we're going to talk about Bit Digital. And as of December the 31st, the company had increased their Ethereum hodl to 155,227.3. That had a closing value of about 460 million as at the end of December the 31st. Now we know the Bitcoin price has rallied a little bit since then there. So again, probably heading towards the 500 million mark as we speak at the moment. Now, during the month of December, the company acquired approximately 366.8 Ethereum, and this was acquired at an average price of just over $3,000. So again, they've purchased Ethereum at the low price there, and then we're now seeing that price rise above 3,200. The company staked an additional 642 Ethereum during the month, which means their total staked Ethereum was at 138,263, or effectively 89% of the total holdings as at December the 31st. And for doing this staking, they received nearly 390 Ethereum in the month in rewards during the period. So well over $1 million just in staking rewards. Now that represents an annualized yield of approximately 3.5%. So making good use of the assets that they have on the balance sheet. Now, in terms of shares outstanding at the end of December, Bit Digital shares were 323 million. And as you quite rightly say, Bryce, they maintain ownership of 27 million white fiber shares, and that has a value of over 427 million as at the end of December. So really, it puts Bit Digital into a really good place at the moment. I think this is where Sam was, he was getting frustrated as in the previous cycle to turn around. We had everything under one company and he wasn't getting the recognition. Now we've got the split between the two. Now we can see both companies now operating and delivering their own strategies and being rewarded by the markets for delivering those own strategies there. So I think, he can see the joint value of Wi-Fi and Bit Digital significantly now closer to where it needs to be compared to where it was previously.
For sure. And we just saw that big announcement with their North Carolina 1 flagship site and N-Scale out from white fiber. So looking forward to more announcements on that front as well. Now, speaking of performance announcements and contracts, we just launched our Miner Madness 5.0. It didn't take very long to get the leaderboard moving. We've had a big start to the year for this sector. You can see this is as of last night's leaderboard. All of the analysts up in the 20% range just a week into the quarter or into the year. We also have our leaderboard updated on the website now, so you can go and see your individual picks, name, and rank on powermininganalysis.com. You'll also get updates each Friday through the newsletter. So this is a great competition, but compared to the last iterations of this, we are off to a strong start.
Yeah, and actually looking at the leaderboard there, I mean, we're literally on the 7th of January, so only probably about 4 days of trading, and we're already seeing that the top picks are delivering over $105 profit on their $300 investment or notional investment. That's a total return of 35.2%. Now, we're not going to say that those that are at the top of the table in the first week are going to be the winners, but it looks like having a quick look at that leaderboard, if you've got Soluna in any of your 3 picks there, you're doing pretty good because they've had a certain movement up since the start of the year. Remember, the shares were sort of hit quite heavily towards the end of 2025, and probably at a point in time when we highlighted this on the podcast, that maybe there was some value in there, considering we've been to the site. We speak to John regularly through the podcast, and we're updated with everything that they're doing. And it just didn't feel that the market valuation for the company was where it should be. And since January, we've seen a reversal of that there. The share price has done quite nicely, but we're very early days into the competition. I think there might be a few surprises as we go forward there. I'm not on the front page anymore. I'm probably on page 2 or 3. So, but as I say, it's week 1. I think most people on the competition are in profit. So that tells you that the mining stocks have been pretty good since January. If everyone's in profit, we saw that a couple of competitions ago where literally everybody finished in profit by the end of it. We've had a couple of competitions where nobody's finished in profit. So equally, you can have the challenging periods as well. But I think I'm optimistic for Q1 here. I think everything heading towards this early part of 2026 is very positive. We're going to hear a lot more about more deals being announced. We're also going to hear about maybe some new companies coming out and delivering strategies that will sort of enhance their ability and performance and margins. And so I think I'm very optimistic for the early part of this year.
I am too. The dominoes are starting to line up for us here, so we'll continue to monitor. We'll see you guys back here tomorrow. Hit the like button. Feel free to subscribe. Thanks so much for watching.